Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, February 2nd through Friday, February 6th, 2009. Now, what we're going to do today, folks, is obviously get into the hardcore technicals about the charts and their setups and talk a little bit about what we saw last week, what have we seen over the last couple weeks, and where this market could be headed, because we've seen the market trade in a general range, and we're looking at the SPY daily right now, which again mirrors the S&P generally, and you can see for the most part of late we've been kind of trending up and down, and even going back weeks. You can see this market really hasn't made a whole lot of movement ever since this low over here on the daily, and just draw your trend line right across. You can see that we're in this range now where we're had a high of up here and a low all the way down here, and we just continue to trade and gyrate through this area. Now, what that's telling you is that the market's kind of trying to figure out where it's going. I'm not going to do a whole lot on this daily chart, only because that's for our premium subscribers in the Research Center, where we project out multiple days and give them key levels and so forth. But this is what you want to look for in this market, and note that the key levels are continuing to be hit on this daily chart, and it's acting beautifully. And those in the Research Center obviously know that. Now, let's get right into the hardcore about what happened last week. First of all, let's flip to the intraday chart and discuss Friday's action. Because Friday was a very interesting day only for one reason, and that reason was the middle of the day sell-off that we saw, which really took us to the lows of the day later in the day. Now, what happened here, folks, is this. We basically had the bad bank situation, which was a big lift in the market early in the week, come out on Friday afternoon right here, and be told to the markets that it probably wasn't going to happen in its current form. The markets took that as a bearish, obviously, situation, and we did see a nice little sell-off. And you can see the 3-bar slash down here, or pullback in the markets, before a nice little bottoming tail and a bounce. But ultimately, that was the big deal right there, and that's why you did see the market selling off. Before that news came out, we were actually almost positive. We were basically down about 50 points on the Dow at that point. Now, for the week, the markets kind of were mixed, and the reason I say that is you saw early in the week some nice up movement, and I'm going to show you that on the chart. You see here on the 60-minute, this is the 60-minute SPY, you can see that the market actually trended higher early in the week, gapping up here on the 28th, but then Thursday, Friday got slammed lower. And the key about this 60-minute, and I love this 60-minute because it's such a great indicator, guys. The chart patterns on this 60-minute have worked out to a T. I can't stress it to you enough that the levels here, and I want to show you this. You want to take your levels here, guys, alright? You want to take your key levels on your breakout points. Take the high here and just extend it right down, okay? And this is why. Alright, number one, this was your original breakout for this week. Now, why do I say that? Well, this is a trend line, alright? And this trend line you could actually extend up to here as well, but for now we'll just use it from right at this point. And this trend line is a key breakout trend line because you're having hits of this trend line and then a pullback, and then another hit and a pullback. Alright, another hit, pullback. And what this is telling you here from all these hits and pullbacks is that ultimately, when this level gets broken, you're going to have a nice move up in the market. Alright, that's exactly what it's telling you. It's like a door. I'm running into a door multiple times, a wooden door, let's say. That door is going to get weaker every time I hit it. Here I'm running, slam into it, bounce off. Slam into it, bounce off. Slam into it, bounce off. Finally slam into it, blast through. Now, once I get through, always remember this, guys, because way too many amateurs buy on the breakout right away instead of waiting for consolidation. And that's the #1 catastrophe that amateurs get into. And I can't tell you, 90% of investors and traders do this, and it's such a, it makes me sick because you have to understand, what you're doing here is already paying a major premium if you were to buy it up here. Alright, now why? Let me use the analogy again. Alright, I just hit a door 4 times, busted through to the other side. You think I'm going to be able to continue to run, or maybe do I need to pause a little bit, regroup, after my body's been slammed against a door 4 times? Think about it from that mentality, and you're going to start to realize the conception of trading. Alright, that's the key. So what do? You have to sit back, wait for the pullback, back to this breakout trend line. That's the buying opportunity. Okay? Now, what I also want to show you here is you have a necktie. Necktie of the 50 and the 20 moving averages crossing right here. You have the yellow 20, the white 50. In addition to that trend line, you also have that necktie that's telling you there's probably like now you have, let's say you're falling, right? And now there's a steel door there. This is a steel door. You're not going to come down, hit it, and burst through to the downside like this. All right, way too hard a door, and you're going to hover there, and it's probably like a trampoline. You could think about it as a metal trampoline, if you would, that you're not going to break through here. In fact, you're going to bounce higher, and that's exactly what you did. You bounced up again. You hit the resistance line, which again was this point. You did a minor pullback and then a blast up right to the 200 moving average. Now, these levels, you guys that watched last week's weekly analysis video that I put out last weekend, and that we did it in themoneystocks.com, we called these levels. I mean, these levels are on that video. We said going to the 200 ultimately right here. It's exactly where we did, and now you're seeing the pullback off of that. Now, the pullback has been a sharp pullback. I'm not going to deny that, folks. But one thing I also want to show you is, look at this. Alright, so you hit the 200. That's your target achieved. Once you hit that, if you're not out of this market, you're insane. I mean, this market has been nothing but a trader's market. And you can't expect anything other than that until you see consecutive times where it doesn't happen. Alright? So please understand that, guys. Until it's proven that it's not a trader's market, you can't invest and hold for the long term. You just can't. It's so foolish. Suicide. So the key here, guys, is this. When you hit this is the sell point. You know you're going to get a pullback. Now, the first pullback, notice the tail comes all the way down to the 20 moving average. You get a minor bounce up. Then you come down through that. Notice these support levels. These support levels, which were resistance levels, become support levels. Alright? So this point that was a hit before a pullback and a breakout now becomes support. Notice right here. You had a bounce up, green candle, and then finally you broke it again. Now on the downside, the key is this, guys. Look at how you came all the way down here. Here's your next secondary support line. Just draw that across. You guys might say, how is he getting that? Well, just taking the low here of the pierce of this moving average. So you have the moving average crossing here and the tail. Take that little low, just drag it across. That's where you're going to get that secondary bounce on the green candle. Notice where this bounce goes to, right to the 50 moving average. Alright? Then ultimately the fall down again, where does it go? Look at the breakout line. Trace that all the way down, follow it all the way through, and this is why it's so imperative you keep your same trend lines in your chart day after day, week after week, month after month, because believe it or not, there's trend lines in this market from 1997, 1999, from back 10 years ago, because we've come down that far, that are now in play. Alright, now that's again for the hardcore analysis that my company does and I do, for us to do and give to our premium subscribers, but nonetheless, you guys can obviously get that by joining the Research Center. But the point here is, look at this level. Where does the market go to before a little bounce into the close on Friday? Right to that key level, which again is a key level right here. It was a very key level here before the breakout, then again all the way back down here. So that's my point, guys, is that please use your trend lines, learn them. We have a webinar coming up on February 7th where we are going to go into more technical analysis details about how we discover our proprietary techniques. You can go to our website and sign up for that at inthemoneystocks.com. Now, the other thing is here, folks. Now, this level has gotten hit already. It's not nearly a sophisticated level, but it is still a support level. So the thing we're going to watch for on Monday is, do we break below this or do we bounce? Alright, you have two possibilities come Monday. This way or this way. Alright, now this is still support because you still have hanging on this level and you still held that level. Doesn't mean we'll hold it on Monday, but it is a support and it would not surprise me to see us hold it. Alright, if we break that, now you're coming into some key levels, alright, and then you start coming into some support levels on the downside down here, alright, and so forth. So just keep an eye on that, guys. Again, I just want to quickly go over some economic news this week. Here's some economic news. February 2nd, we have personal income, personal spending, construction spending, ISM index. Tuesday pending home sales, auto sales, truck sales. Wednesday ADP, ISM crude inventories. Thursday initial claims productivity, unit labor costs, factory orders. And Friday average work week, hourly earnings, non-farm payrolls, unemployment, and consumer credit. That unemployment rate will be big, guys. That's what the market's really going to look for. The non-farm payrolls, that'll be big as well this week. And earnings-wise, there's not a whole lot. There's really not a whole lot. You have a couple, let's see. Monday, SanDisk is a notable one. Tuesday, Archer Daniels, Electronic Arts, Shearing Plow, Tyco, Yum Brands, and let's see. And on Wednesday, we have Akamai. That's an old player. Alcatel-Lucent on Wednesday as well. Prudential, Pru. That'll be big because it's the insurance side and it's kind of connected to the financials. Thursday, Evergreen Solar. That's a small solar play, but I like to kind of watch the solars for possible plays. And GlaxoSmithKline and Kellogg. Alright, guys. So again, keep in mind, here's your daily. Again, you want to follow the key levels here, folks. Have a wonderful weekend. We'll see you this week. Join the Research Center. Take care.